Today's topic is about retirement planning and asset allocation. It is a very important topic because many of us been growing up have been not thinking about retirement, how we're going to plan our retirement, because most of us right now are working with private sector. Very less social security being provided by government. So it is very essential how we should plan our retirement. Retirement is very essential in terms of providing financial security in our later years. It also involves about financial goals, assessing our financial goal, which goals we want to achieve in our later part of our life, what kind of expenses we want to have. And to assess all those expenses, we have to obviously plan now, and we have to make our investment in such a way so that our investment grow up and they are able to meet our expenses in later part of our year. So what kind of asset are available to our customers? It is equity, debt, gold, and other assets like Bitcoin, properties, fixed deposit, and and obviously art and their collections as well. So in what percentage your investment should be there so that they're able to hedge, they're able to take care of your expenses whenever you need it. So it should be planned in advance what kind of asset allocation you should have. So asset allocation is basically a prudent strategy. Basically, it helps you to balance your risk. It is basically other way of saying that it's a diversification. So it should be either it could be bonds, gold, equities, mutual funds. So these are some asset classes where you can invest in these kind of products. So basically, asset allocation provides you to have better risk management, to diversify your asset classes differently to market condition. So say, for example, you're investing into equities. So equities tends to outperform in a scenario when market are booming, but it is inverse when markets are not, when economy is not doing well, your equity investment tend to perform very badly. So you should have some bit of gold as well, some bit of bonds as well, because normally when the war type situations are there, the equity tends to perform badly. The gold can be a hedge against your portfolio, or bonds can be a hedge against when the rate of interest are coming down. So a bond could be a good in terms of asset allocation you can have. And you could also invest in those products which help you, which have potential to grow, like as mutual funds or stocks. So they normally outperform inflation. So normally their returns are in between 10 to 15%. So you should also invest in these kind of products. And or you can also invest in products which are inflation hedge. So normally it is believed that gold is an inflation hedging instrument. So this asset obviously tends to outperform when there's a crisis type of situation in an economy, or there's a war type situation. So this type of asset class tends to outperform. And you can obviously invest in those stocks or bonds which have regular income annuity. So bonds or dividend yielding stocks can be a better option for you. And obviously asset allocation can be tailor-made to for a client who is risk averse. So you can obviously advise bonds or a gold type portfolio, and obviously you have to review your portfolio. If your asset allocation, normally what happens is, like scenario like now, when equities tends to outperform bonds, so your asset allocation tends to distort. So you have to regularly review your portfolio. You have to regularly assess how your portfolio is doing. So you have to rebalance it. So there are two type of asset allocation strategies. It is strategic and tactical. So strategic asset allocation is like which is presented in that. So say for example, you have invested 40% in domestic stock, 30% in international stock, and rest 30% in bond. So and it is passively managed strategy. So if equity tends to do well, and obviously your bond percentage has come down because equity tends to have outperformed the bond. So after 6 months or periodically, whenever you assess your asset allocation, you rebalance it again back to the same allocation: 40% domestic equity, 30% foreign equity, and 30% bond. Whatever the allocation you have opted for, so you rebalance it according to your plan. And tactical asset allocation is that, so where you tends to take a call according to your view. So normally, say for example, if equity tends to, if you believe that equity has to do well, so you increase your allocation to equities, you reduce your allocation to bonds, and when there is a difficult situation for economy, you can obviously hedge your portfolio, you can reduce your equity allocation and increase your more allocation to gold or bonds. So these are two basically asset allocation strategy which you can have to build up your portfolio for retirement planning. So they are basically, that purely depends upon how better you are assess. You can assess your risk. If you are a risk taker investor, you can obviously take tactical allocation. If you are risk averse client, you can obviously take strategic asset allocation. So there are a few parameters which you can keep in mind for making an investment. So if you want a higher return, so you obviously have to take a higher risk, and if you want a lower risk, so then you have to take all those asset allocation which have low volatility. And if you want to take in the mind that capital protection is the key, so then you have to take like bonds, gold, or real estate to some extent. If you want to take liquidity in mind, if your retirement is very, very close, you want money in very near future, so the liquidity is the key. So then you should not make your investment into real estate, because real estate is not very liquid asset. And last and foremost is tax efficiency. So if you want to make an investment into tax efficient way, so likewise there was tax efficient bonds which were available, or PPF you can make an investment into. So these are a few investment where you could make an investment. So these are a few things which I wanted to cover about asset allocation. And thank you very much for listening to me very patiently. Thank you.